Hey there, welcome. Thank you very much for having us. This is great to have this group and be hosting the panel. My name is Bruce Fenton. We're going to be talking about all things DeFi. We've got a really great group of experts, diverse backgrounds, and a lot of knowledge to share. And we were just chatting in the green room before, and I think that we're going to have plenty of cool stuff to talk about. We're going to talk a little bit about some of the basics. What is DeFi? How does it work? Each panelist is going to talk a little bit about what's important to them, what, kind of the benefits and drawbacks, best and worst of DeFi. And then we're going to kind of open it up and talk kind of bigger picture, general terms and ideas about the overall, how it fits in the Bitcoin ecosystem and with other coins and what the various projects are and what do we all share in common and this kind of thing. So what I'll do to start is I'll just go through each panelist and if you could just sort of introduce yourself and, if you have a company or organization or, what kind of brings you in, how do you define yourself? I guess, my name is Bruce Fenton. I'm a financial person with Chainstone Labs, and I've been in the crypto space for some time. And I've always been interested in, I'm a profit maximalist and an ideas maximalist. So, I've always loved to learn about new things. So, let's start with Chris Black. Maybe you could introduce yourself and get us started.
Sure. My name is Chris. I'm an analyst and researcher in the space. Before that, I spent about 20 years being a marketing guy, head of marketing, head of growth for a number of startups and tech companies. And right now I'm focusing on providing content for users, educating them. I like to say about the good, the bad, and the ugly of DeFi. I started a Substack called Surviving DeFi, and that's what I do there with written posts and videos. Nice.
Max.
Hey guys, thank you for having me. First of all, my name is Max. I'm from HODL. It's a trading, lending, and actually prediction markets platform, non-custodial. So recently launched Bitcoin DeFi project, and I've been researching the space for at least for this year. I'm pretty fascinated with all the DeFi stuff happening, hoping to bring best practices to Bitcoin as well.
Awesome, thanks. DeFi Dad, welcome.
Hey everyone. Yeah, hey, thanks for having me. So I would classify myself as a DeFi educator, obviously also an investor. I work on the core team at Zapper. So Zapper.fi is a tool where you can connect to your Ethereum wallet and your Bitcoin wallet now, and you can see your portfolio on chain. So anyways, I've been working there for actually just a few months, but I've been into DeFi for probably about a year and a half now. And then, I've been in Ethereum for about 3 years in total. And I came into the space, I think like most, kind of wide-eyed about all the possibilities, got sucked into Bitcoin right away. Still count myself as a member of the Bitcoin community, but I tend to focus more on how we can build this new peer-to-peer finance architecture on Ethereum. So thank you for having me. One other thing, please, if you want to learn more about DeFi, you can go to defidad.com. I do really extensive tutorials there on how to use DeFi. I also host a daily DeFi live stream called Yield TV. It is powered by my team there at Zapper. So we host all sorts of founders and love to basically help people learn about DeFi.
Awesome. Yeah, you have a lot of great content. And speaking of great content, David, welcome.
Hi, I'm David Hoffman. I got into the world of crypto in 2017, as many did, but I started writing about it and doing a podcast about it in 2018 with my co-host, Christian Corollas, who's a big Bitcoiner. And that podcast was focused on the Ethereum versus Bitcoin perspectives. And that really helped me kind of sharpen my mental models about how and why these communities are different, and also how they're the same and where they overlap. And that sort of content production, as well as my own writing, led into Bankless, which I run with Ryan Sean Adams, which is all about producing theses about this space and mental models about this space, and then plenty of educational content as well, all about how to think about DeFi, like what it is, what it does for us, what it does for the world, and then also importantly, how to use DeFi to live a bankless life, a life without banks. How do we use these crypto economic platforms like Bitcoin, like Ethereum, and the protocols on Ethereum to execute our financial activity in a self-sovereign, independent way. And that's what Bankless is all about. And it's got a newsletter and a podcast and a YouTube channel that are all ready for you to subscribe to.
Perfect. Well, that's exactly a great transition to sort of our first question, which is, about exactly the topics you were just talking about. What is DeFi? I'd like to ask each person sort of, what is DeFi? If you're meeting somebody at a cookout for the first time, with, say, they're a somewhat technical developer type person, Silicon Valley or whatever, and they just say, "What is DeFi? What is it, and what are you doing, and what does it mean to you?" So, Chris, what's DeFi?
So, to me, DeFi, there's really two different DeFis to me. One is the DeFi that we have right now on Ethereum, and the other is decentralized finance. And what we have right now on Ethereum are, generally speaking, they're startups. They're startups that are building smart contracts that do a variety of things. They're permissionless. Most of them are open source, and that's where they derive most of their unique value. And so users are able to use them permissionlessly without KYC to lend, to borrow, to generate interest, all different kinds of stuff with their money that normally they'd have to do through a bank. That's DeFi. Decentralized finance, on the other hand, to me, is what we should be striving for. And that's, in addition to permissionless and open source, that's also trustless, that's also censorship resistant, that's also making sure users always have sovereignty over their funds at all times. And those 3 out of 5, those 3 things are still missing from DeFi. So that's my take on DeFi today. Interesting.
And Max, what's interesting about you is that you're doing DeFi and Bitcoin, and sometimes those two sometimes it's thought of at odds. There's Bitcoiners who sort of think of DeFi as only not Bitcoin, or tell us a little bit about that.
Yeah, it's true. We're trying to do DeFi. For us, it's basically removing all the central points of failure, like, not having a custody, not having fiat in some ways, because fiat is only creating another friction. So in our latest project, we just completely removed all the fiat. We're just using stable coins versus Bitcoin, and that's it. Way more easier, honestly. After 3 years working with Bitcoin versus fiat, Bitcoin versus stablecoin is way more easier. So and obviously allowing anonymously do all your stuff, not going through KYC, and what Chris, I would agree with Chris on decentralized finance concept. It's really like saying by the words of Mandalorian, this is the way, because obviously we see that there's a lot of threats, risks, regulatory wise, and other things. So the more non-custodial, anonymous things are there, the better it is. So in my opinion, DeFi is just a logical next step for evolution, not only for Ethereum, but also for Bitcoin.
Cool. How about you, DeFi Dad? What do you think on this?
And you guys knocked it out of the park there. I thought Chris's definition.
Yeah, it becomes harder to answer this as we go.
No, Max too added a lot of great context to it. I think the only thing I would add is that I think of DeFi as bankless money applications, or like peer-to-peer money applications. I think a lot of my fascination with it derives from what I believed in from the start with Bitcoin and what I saw working with Bitcoin. I've never thought as much about the users who hold cryptocurrencies in the United States. I felt learned more from my friends that live in Argentina or Nigeria, or just any other part of the world where people are more open and urgent to seeking an alternative form of finance. And so what Chris was pointing out is I see it as a spectrum, and like there are certain projects, like Chris could point this out, are doing it right and are more decentralized, or truly can claim that they are decentralized. And there's other ones there where they're operating more like a startup, and we're putting our faith in the fact that the roadmaps that we see and the progress that's being shown will lead them to getting to that further along in that spectrum. And so, yeah, I'd say, just going back to what is DeFi? Yeah, bankless money applications, peer-to-peer money applications. It means no KYC. It means all you do is connect to your wallet per usual in a permissionless app. And it means that no one ever should be able to take custody of your assets. However, you'll see today, as we talk more about this, the fuzzy question in all of that is you can't just say, well, because I connected my Ethereum wallet, no one can take custody of my assets. Well, it depends on what sorts of controls there are of the smart contracts you're depositing into. And so anyways, the key takeaway from all of this, I'd say, is just the growth that we've seen just in the last year especially. I'm hoping that we can show that there's some real fundamental value being delivered with, things like lending at higher rates, borrowing, let's say, at lower rates, being able to instantly access financial tools that often are gated by KYC and signups and by lots of middleman fees. So anyways, that's DeFi for me.
Very cool. How about you, David?
So I think DeFi is actually the entire point of this revolution. Like, the technology that Satoshi Nakamoto unlocked, it unlocked DeFi. And Bitcoin is like the first instantiation of decentralized finance. It's decentralized, and it's also like a stable or it's a store of value asset, right? And so those things are decentralized finance. However, there's much more to decentralized finance, and what it takes to unlock that is a smart contract platform like Ethereum that allows you to integrate logic into your financial activity. And people, I think there's a perspective out there that there's Ethereum and then there's DeFi that's a part of Ethereum. Like there's the internal part of Ethereum that is DeFi, and then there's external to that's the rest of Ethereum. I actually don't like that viewpoint. I think that this DeFi ecosystem that's growing inside of Ethereum is itself Ethereum. Like, the whole Ethereum is nothing without the contracts that are inside of it that are things that people can do. And we all know the term money Legos. When somebody builds one Lego, one deploys one contract to Ethereum, that can be interoperable with other contracts on Ethereum. And as DeFi applications grow, we've seen the growth of Uniswap doing more volume than Coinbase lately. We've seen the growth of all these other borrowing and lending applications, and now they're all starting to get stitched together. So to me, DeFi is actually this one singular structure that is growing, that offers a central place to do all of your activities. And DeFi Dad's company, Zapper, what they're doing is they are creating mechanisms to integrate with and use this entire structure all at once, rather than having to go to each individual component, right? So to me, DeFi is actually this one growing ecosystem, this one growing structure that, as when you view it from a bird's eye view, from a satellite view, it actually is Ethereum. That is Ethereum. And so, to me, DeFi is just this ability, and it's really important to have this structure, this internal nature, because if we are trying to get away from the external world, which we are doing with Bitcoin, which we are doing with Ethereum, there's a lot of top-down authoritarian type regulations that we think are coming into this world. And so that having this internal structure for you to be able to escape to and go away from the periphery of a blockchain and into the center of a blockchain, I think is really, it's important to be able to have that option. And that's what DeFi offers the world.
Very cool. I think all of you mentioned KYC, which is interesting. I'm always, you probably know, I'm super into securities, and securities present a couple problems. They're super regulated, and it's hard to not be a security. Do you all see? Do you see uses where in areas, for example, where you have to have KYC? Do you think there's, for example, could you have something like securities trading on Uniswap? I always thought that would be cool. I haven't figured out how to do it myself, and I don't really know anybody who's how to do it. And it presents a challenge, because if you're, suppose Elon is watching right now. If you are, hello, Elon. But suppose he's watching, says, I love it. Sounds great. I want to figure out a way to put Tesla stock he comes to Bruce Fenton. Bruce Fenton says, sure, we'll do the regulatory, help you on the regulatory part. And he puts it on Uniswap and trades it. There still would have to be some kind of KYC. So I'm curious if you see other areas where, healthcare or other areas that are very heavily regulated where it may be challenging, or if you see some way for it to work with these kind of things. And do you see, does everybody agree that KYC, or kind of, I don't want to say avoiding KYC, but presenting an alternative technology that doesn't require KYC is, is that a killer use case? If I don't know if my question kind of went all over, but I think you guys know where I'm coming from.
So there are actually securities on Uniswap. And that's actually one of the great things about DeFi is it offers tools. And it's up to the people that use the tools to figure out how they want to best leverage it. And so like Realty, a company that I was formerly the COO of, issues real estate tokens into Uniswap, and they're whitelisted. And that's how they maintain compliance, right? So only the people on the whitelist can engage with that token on Uniswap, right? And so Uniswap is acting as this trustless, intermediary-less structure for Realty to use. It is a market-making mechanism for any sort of security token issuer, which makes a really interesting conversation about the spectrum of DeFi that there is. Like permissioned financial activity can use permissionless financial activity, and it actually is more. There's more total options available because of DeFi. Because everyone can use DeFi, we can also use DeFi in a permissioned manner with something like security tokens.
I think that another way to put what David just said is that there are DeFi assets that can flow through DeFi pipes, but there's also centralized assets that can flow through DeFi pipes, right? So think of it like pipes. You can put anything through the pipe, right? So it's almost like there's two different sets of what you want to call DeFi. The issue comes when we start to get mixed up about what is DeFi, like what is decentralized. And for me, it took me a while to get to the point where I realized, like, when I'm talking about decentralized financial services or decentralized assets, I need it to be trustless, open source, permissionless, censorship resistant, and self-sovereign to users. And in the case of securities with KYC, they just don't qualify. They don't hit those buttons. So those are centralized assets, right? The securities that are fully capable of flowing through decentralized pipes. It's important to draw that distinction.
Yeah, that's excellent.
Between like what Chris and David are saying, I've gone, we worry that if it's not done right from the start, will we ever achieve what DeFi is supposed to be, decentralized finance, or will it look like legacy finance and bring with it all of those legacy issues and basically not empower the people that you hope are empowered by it? So yeah, I fight going back and forth between like, should I be more pragmatic and accept the fact that you have this idea Chris just put forth of like the pipes that are DeFi, but you can have some centralized assets flowing through it and just be open to it. And then maybe even be open to the qualities that we've talked about here that I'm probably the most open to compromising on, but I sincerely, I guess, don't want to still, is KYC. That could open up some applications sooner to chug along working towards, DeFi without KYC. It's very, and this really goes back to a problem that the Bitcoin Ethereum community have been fighting forever, which is, we all want mass adoption. We all like want to, put up our middle finger to the man along the way, but then we figured out that if we do that we could potentially lose the opportunity to work with those that we can flip, that are the man. So anyways, that's where I'm at. And I think I feel lucky to not be working on a DeFi protocol itself right now. I think that's one of the hardest jobs in the world. Like, instead I can kind of observe it all and continue to try everything and curate what's cool and what works and how you can potentially put your money to work.
Yeah. Very cool.
My opinion actually on KYC, I would say that the KYC system is broken. It only works. I was on one conference and there was like pretty extensive report. It works only in 3% of cases. So basically you imply this massive amount of, I don't know, KYC officers, rules, regulation, all that mumbo jumbo, and it only works in 3% of the cases. And to add to that, before joining crypto, I was for 10 years a private banker, and I would only confirm that it only works in very small amount of cases, and it harms very, very large amount of people who are basically cut off from the banks now at the moment because, or from any type of financial system, because they cannot barely pass the KYC requirements, not because they're bad people. So before implying some KYC, some stuff, or giving an option, you can trade this with going fully compliant, or you can trade this like crypto without any compliance. You need to fix the system itself. So yeah.
Well said. Well said.
I would like to add that I don't think that it's DeFi versus KYC. I think they're almost relatively unrelated things. I think there's going to be a DeFi ecosystem on Ethereum, and then there's also going to be stuff on Ethereum that is KYC. Like I was alluding to with Realty, right? The growth of an internal DeFi ecosystem can happen independently of KYC. And if somebody comes and builds something on Ethereum that requires KYC, there's likely already or going to be something also in the DeFi ecosystem that is trying to make that into a protocol without KYC. KYC is like it's an easy way to just like commit to centralization and then therefore move fast and have some of the tried and true security measures that we already know from Web 2 and from legacy finance. DeFi is hard, and so it moves slower. But I'm confident that anything that you can do with KYC, you can work a little bit harder, figure out how to plug some holes, and then make it a DeFi application on Ethereum as well.
KYC too has definitely slowed growth in applications that are DeFi or have DeFi pipes or make use of DeFi pipes. I think we've already seen the market does not reward it. Realty is, I think, doing relatively well. It's in its very niche space in DeFi, but has it grown the way like an Aave has? I mean, maybe I'm comparing apples and oranges because it's like a money market versus Realty. But anyways, there's that. There's also Nexus is like a topic. Again, some of these other DeFi applications have. And I think it's because there's a lot of users who are like, there's no way in hell I'm KYCing in order to gain access to this. Sorry, guys. Was someone else?
Yeah, it's really easy to onboard 10,000 users when you don't have to ask them to do anything. Like permissionless protocols are going to be used more than permissioned protocols. And that's kind of why I think all of us here are bullish DeFi, at least in the long term.
Yeah.
Yeah, for sure. I think it's interesting to see the, both the effect on regulation, and we can talk about the Stable Act in a second, but I think it's an interesting distinction where, especially like David was talking about, kind of like you can have the, some things I just don't think you're going to get around it. Like securities, you can only get so clever. I mean, Disney is Disney, and it is a security, and there's nothing that's going to make the SEC say, okay, you're not. If there was, Disney would have done it. There's just no rules anymore. And there's also very unfortunately new thing that was just invented. I mean, people act like this is some cornerstone of the economy that nothing would work without it. It's just some nonsense that was invented less than 30 years ago, really, in its current form. But I wanted to talk a little bit about the Stable Act. We were talking about that before we came in, or even more broadly to kind of continue on with this thought about KYC, because I think that's one of the core things that's very interesting about this, and all of you mentioned it, is sort of what's going on with DeFi. But particularly interested with the how you have these alternatives where you can have a very, very decentralized base level protocol, and then you can be as selective as you want, because in the world there's going to be some of it may be driven by regulations, but some of it is just maybe voluntary. It becomes $1 trillion thing. You're going to have people who want, Sharia screens and this kind of screen and that kind of screen. And it may or may not be driven by regulation, but you're going to have multiple jurisdictions. People are going to want certain controls. There might be somebody who says, we won't deal with this country or that country. And so, you can't put those at the base layer. So there's going to have to be controls, just like there are now. So if you could kind of continue, think about those things and how it may, concerns from acts like the Stable Act and stuff like that. It was interesting to note that this kind of unified people. We were talking about how this kind of unified people, and I'd love to hear you guys' thoughts on that as well.
The current state of DeFi is concerning because the vast majority of DeFi products, whether it's pipes or assets, have the ability to be controlled, whether it's by the founding team or by investors or by just large. One of those DeFi projects are subject to government pressure, to regulatory pressure. And even the biggest ones, like Maker, for instance, MakerDAO, which created and runs DAI, the stablecoin, a vote can be passed in MakerDAO with maybe 3 of the top whales coming together and deciding to pass a vote. So if regulatory pressure came down and they track down those 3 whales and say, do this or go to jail, what are they going to do? They're going to vote in a change. Okay. There's ways that users could then respond to that. There's mechanisms built in, but that's an event could have. This is across the board in DeFi. My concern is that if we are not sincere about building a trustless form of DeFi, that the DeFi that we're building today is going to offer opportunities for more surveillance, for more censorship, for easier ways to pass really fine-tuned regulation, not even just broad regulation, but like you were mentioning, regulation down to individuals, down to characteristics of you as a person, your religion, if you're identified, if you're tied back to your Ethereum addresses. Now, look, I have no doubt that there's going to be, like David said, you can build pretty much anything on Ethereum. You can build trustless applications. The question is, what's going to gain the most adoption? What's going to have the most use? And if KYC, if the Stable Act goes through, if things like that happen and pressure is put on founders who are easily identifiable and easily accessible across the board, then we could end up with something worse than what we have today with traditional finance. So my take is trustless or like DAI, basically, as far, and not DAI, I'm talking DIE. We gotta figure out a way to address these issues, or else we're going to end up in this dystopian financial system that's way worse than what we even have today with Jamie Dimon running the show.
Wow. So I have a more optimistic take than Chris generally about the path that DeFi will follow. One of the theories that I'm a big fan of is that when something new comes into the world of DeFi that extends all the qualities about DeFi that we like trustlessness, permissionlessness, it like hits all the boxes of what makes a DeFi protocol a DeFi protocol. Uniswap is a really good example of this. When something like Uniswap comes into the fold, comes into the ecosystem, when that money Lego gets added to the structure, the rest of the DeFi money Legos can start to leverage Uniswap. And according to what me and Ryan on Bankless called the protocol sync thesis, everyone will be incentivized to use the maximally decentralized applications like Uniswap. For all the reasons that we know Bitcoin is valuable, it's decentralizedness, it's censorship resistance, it's permissionless. Bitcoin is really, really valuable for that. And then we can also add in the hard cap, which is like the feature of Bitcoin, right? But all these underlying qualities like permissionlessness, censorship resistance, decentralization are extremely valuable to have in every protocol. meaning that if a protocol comes into the fold like Uniswap that maximizes the same things that make Bitcoin valuable, the same things that make Bitcoin valuable make Uniswap valuable. And when more things like Uniswap come into the DeFi ecosystem, the rest of the DeFi ecosystem becomes more trustless, more censorship resistant, more decentralized. And so when Uniswap can act as like infrastructure for the rest of DeFi, it's actually easier for the other DeFi applications, which have massive holes in them. As we know, as Chris has alluded to, they have massive holes in them that they are working on filling. And because this is a money Lego ecosystem, when each application on Ethereum can talk to and speak to other applications, sometimes the hole in one application can be filled by a different application that is decentralized and permissionless. So there's this inevitable march towards censorship resistance, towards decentralization, towards permissionlessness. It just takes time to get there, and it takes innovation. And I would say like MakerDAO, which again does have this like foot in the a committed foot in the centralized world. That was the first instance of any DeFi protocol ever. Like that was kind of the birth of DeFi, was from MakerDAO in December of 2017. So like it's not going to be perfect on day one. And MakerDAO actually came into existence without any supporting infrastructure. And now there's so much more supporting infrastructure. Like DAI now has permissionless liquidity because of Uniswap. And so I expect like all these holes that we are concerned about in the DeFi ecosystem will naturally get filled just by generalized problem solving, because replicating Bitcoin's qualities as a decentralized, permissionless, censorship-resistant platform is super valuable for all these other DeFi protocols to also build off that same ethos.
I just want to reply to one part of that about the holes being there and they're eventually going to get filled in. The problem is that with today's DeFi, most of the holes that exist, like with MakerDAO, the tokenized governance compound, and everybody that's created governance tokens, those are some of the biggest holes that are out there. And other ones are admin keys that can be used to manipulate the logic of the smart contract. But specifically when it comes to governance tokens, that's a hole that was created by the project after it started. And it was created because this is a startup. They're startups, and they're looking for ways to create profit, and they're looking for ways to generate a positive ROI for their investors. Okay, and a token is how they do that. So I'm a little pessimistic because these are problems that are being created after the founding of the project, and they're being done for greed. And I'm all about greed. Financial incentives rule the world, right? But I do not believe that a project that is started with the motivation of generating profit and a positive ROI for venture capitalists and whatever other investors they might have is ever going to reach the point of pure decentralization as we know it with Bitcoin. Simply because to move from a centralized project to completely decentralized is expensive. You lose efficiency. You lose so many positive things. We all know that Bitcoin could be faster. We all know that it could be cheaper. We all know that it could be look way more like PayPal. But we haven't done that because we want to protect what's special about it. We know it's easy to go from decentralized to centralized, but to go from centralized to decentralized is nearly impossible.
That's an interesting take. I think that's that's a great point. It's sort of like I'm hearing from both of you a variation that David's sort of that it's like you have this natural march towards, because maybe you both agree on this, where you have this natural march towards decentralization. I think that's everybody's goal. You just have a different view of how that may happen. But either way, it sounds like, whether it's Chris's belief or David's belief, it sounds like there's either going to be new projects that come up, because if somebody makes something centralized, they have venture capitalists back it. As long as the code is open source, some scrappy other person's going to be like, I'm going to do that with my friends for free as a true open source project. And it's sort of like you have this trade-off. I've told people before, I said, people who want to start a coin or something, I say you should do two things. You should either be a startup and go raise money and sell equity and be fully investors, cap table, KYC, all that, or be totally, fully, really open source and maybe even anonymously, but give it away, open source, and I don't know, I mean, there's a lot of challenges with that. How do you fund it development wise? But I'd like to hear from DeFi Dad and Max too. And, what are your thoughts on this as far as like, the trade-offs of centralization versus profit and where do you see it unfolding, based on what Chris and David just said?
Well, actually, I believe that there's still a room for like raising money for even decentralized solutions, and there's a ways like incentive programs, crowdfunding, all that. Even like BTC Pay server showed to many people in crypto that there's an opportunity to create a proper open source project and be funded via donations. Well, that's one of the ways. There's investors who are investing in non-custodial anonymous projects. Still, they take a risk, of course, but again, like returning to the previous question, the only way we can actually answer to all these threats from regulatory point of view is by building proper trustless tech. So I agree with Chris on that. I'm not very optimistic about the future because I'm always being pessimistic. Obviously, that's the part of every Bitcoiner, that we are always trying to be prepared, at least to some extent. But I'm very pessimistic. But one thing is that I see that there's a lot of projects, both in Ethereum and in Bitcoin, popping up at the moment, launching out at the moment, who are way more trustless than it was. And people are actually starting to think that being anonymous, being non-custodial is not the way of doing something illegal. It's just your basic human rights. You are pro-privacy, which we're all striving for, and you're your own bank, and that's the way it is. That's the way it should be. So only building proper tech solution, bridges, pipelines, whatever, will allow us to beat the regulatory pressure. That's my take.
I love that, Max. That's kind of going off of the be your own bank. I think that most people in the world, and they're normally those outside the Bitcoin and Ethereum community, they don't fully grasp how broken the system is. Now, that's me speaking too from a point of privilege. Being in the US, like even when things are broken, I recognize they're not as broken as what people have endured in other parts of the world. And so like this is, I guess, to bring it back, Bruce, to your original question of like the Stable Act, there was this this bill that got proposed in Congress a few weeks ago, and it is a tone-deaf bill that asks that a stablecoin issuer would need to obtain a federal banking charter. And it goes into detail with a number of other requirements, including FDIC insurance, it's all ridiculous. It's written by someone who has, funny enough, bantered with lots of Bitcoiners and Ethereum maximalists and those of us in the DeFi space, and has demonstrated that they really don't understand how consensus works on a decentralized blockchain. They don't understand really what it means to run a node on Bitcoin or to be a validator on Ethereum. And what it screams is that education is going to be so crucial for us to continue to see adoption and to like enable a world where you can be your own bank and you can transact privately, and you can actually use trustless, permissionless applications. So I'm somewhere in between. Like I think David is more that much more optimistic than me. Chris is a little more pessimistic than me. I'm somewhere in the middle, feeling that the innovation will continue to be built, but I recognize there's entities like Coin Center that do a tremendous amount of work for our communities to educate lawmakers, at least in the US, on these issues and how to not regulate away the future of money. And one last thing on that, I think what's cool though is over the last few weeks, Bruce, you sort of alluded to this, is it has reminded us all, like, what is the common enemy? The common enemy is those who mean to tamp down on us being able to have control of our own wealth, to be able to transact privately, and to not have to do it under the thumb of an authoritarian. And so Gitcoin grants, which are basically, they're powered by really generous matching partners, and a mechanism where you can basically make as small of a donation as $1, and then it gets matched by those matching partners. They raised, like, I think hundreds of thousands of dollars, or at least
it's going to be over 200,000.
Over 200,000 for Coin Center. So, like, per usual, you see this groundswell from the community that, like, we're not going to put up with this shit, and we're going to take action. And again, I think it's something that's very special about the Bitcoin and the Ethereum community.
Can I just give another take on what DeFi Dad just put out there? I think one thing I want to make sure everybody gets is that if Bitcoin was easily changeable, there would be nonstop debate in Congress right now about bills and laws and things we should do to tweak the knobs and acts, and it would be nonstop if there was a way to change it. The problem with the current state of DeFi is there are many, 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 many ways to put pressure on companies, individuals, investors, all these different parties who can change it. So the Stable Act, we can never, ever rely on government to be intelligent or reasonable. They're always going to come at us. No matter what Coin Center does, they're great guys and they're doing a great job, but they're never going, maybe they can slow it down, but it's always going to end badly, right? It's always going to end badly when it comes to the way that government moves. And so, if DeFi continues the way it's going, and even if we slow down the Stable Act or get rid of the Stable Act, if we continue to have the ability to change and to manipulate the protocols, the stable coins themselves, et cetera, it's going to end badly for DeFi. So we need to get as close as we can to Bitcoin trustlessness with, and doing that is going to be sacrificing profit. It's going to be sacrificing corporate, interests and stuff like that. We haven't seen that yet. And my concern is that we may never see it. We may not see it in time before the current state of DeFi mutates and becomes something we don't want.
Yeah, when you add these things that you talk about, governance tokens, and especially profit, if you want to make profit, it's easy to make a decentralized project if you don't want to make money. If you want to make money, it becomes a whole extra hurdle. You have to pretend it's utility or avoid securities rules, or you have a bank account. Somebody's going to be a trustee on that bank account. Somebody's going to have, you add hooks. And the more hooks you have, the more people can try and control you. So Bitcoin has no hooks. And the goal that I think we all have is to have less hooks. And the ultimate less hooks, it goes back to Mac's point about being a human right. If you have no hooks, then all it is some code. And it's a lot harder for a government person to say, I'm going to put a gun in your face because you're running the wrong code. When Plattsburgh, New York said that they were going to make it illegal to mine with more than 3 miners, I wrote a letter and I said, well, what if I have, Shakespeare poetry coin and Bruce's religion coin and Bitcoin and Ethereum, and these are all important to me because I really like Shakespeare and I really like my religion. I really like these 2 other crazy things called Bitcoin and Ethereum, and I run them on my own solar-powered node. Are you going to arrest me? And that's the kind of thing that makes a strong case, because it goes to the Supreme Court. The Supreme Court goes, wait a minute, I have a right to run code. They've already said that code is speech, and you have a right to run it, and you also have a right to either publish it, and they also can't make you change your words. So they can't go to your paper and say, we don't like your white paper, change the words, just like they can't say, we don't like the ending to Star Wars, go change it. So if you have less hooks like that, it makes them, it doesn't seem as brutal if they have like the, terrible act like this saying, hey, you need to register and this and this. But if it gets to the point where you say, wait a minute, you're going to pull gun on somebody because they run a piece of code you don't like, that puts the tyrants at a disadvantage, I think. So I think we're all on the same page of that. But with that, we're running out of time. But I did want to go quickly through and just say any closing thoughts, how people can reach you, any other thoughts you have on this topic or anything that we've talked about. This has been a great talk.
Yeah, I want to bring it back to the Bitcoiners who I know are watching the stream. My version of DeFi and my version of Ethereum is that Ethereum and DeFi allow you to express your preferred values and what you prefer to see as valuable without any sort of limitations. Ethereum is supposed to be a politically neutral platform. If you want to do something, Ethereum should enable that. And my vision for the integration of Bitcoiners and Ethereum is that Ethereum allows Bitcoiners to express their Bitcoinerism on Ethereum, right? Like Bitcoin is looking for ways to be expressive. It's looking for ways to be financialized. And it's looking for ways to do those in trustless, decentralized ways. And so getting Bitcoin onto Ethereum is no easy task, but I do believe that there is a trustless, decentralized way to do that. TBTC comes to mind. And as soon as you can get BTC trustlessly onto Ethereum, you can use BTC trustlessly inside of Uniswap and all other further applications that come. So I'm bullish on Bitcoin maximalism on Ethereum in 2021.
Nice.
I'll just quickly add, I never touch an exchange anymore. I rarely ever touch any sort of
I don't have an account.
Entity. Now, granted, we could go back and talk about all the different DeFi applications and where they are in that spectrum. But I really like my love of DeFi comes from my origins in really understanding the power of Bitcoin.
I think our time's just coming through to the end here, so I think we got to wrap up. I'm getting the clock, but this has been a great event. Always wonderful. The LA Bitcoin Conference. If you ever have a chance, you should go in person. But it's been great, folks. I learned a lot. I hope everybody has had some fun. Really appreciate it.
Thanks so much, guys.
Thanks, everybody.
Thank you, everyone.
Thank you.